Hi there, Michael Griffiths here, and welcome to the Business Connectors. Great to have you along with this particular episode. We've got Andrew Chen with us here today from Phoenix Private Wealth, and we'll get hold of Andrew very shortly. But in the meantime, hope you've been enjoying the episode so far. Hope you've been connecting with our guests. We've had some amazing guests over the past few weeks. Please be joining them on their LinkedIn. Please be sending them a message. They're great people with great networks who, just like Andrew, have the mindset of how can we help other people. So take the advantage of those wonderful people and make sure that you're connecting with them, because they'd be more than happy to be able to connect back with you. So Andrew, let's get into you today.
Sure.
Welcome. Tell us a little bit about yourself.
Thank you, Michael. A bit about me. I have an audit and risk management background. I grew up in sunny Sydney, being a very proud Australian, going for the Rabbitohs. So this weekend, hopefully, it'll be the first time in a long, long time. I had heard Anthony Albanese saying he was born with one red eye, one green eye, and he was probably the only one that went to the last final.
Yeah.
I can't remember anyone in my network who has. Anyway, my background is in risk management and audit. So I'm a financial advisor, but I've been looking at financial advisors, the good, the bad, the ugly, and at the time I really loved financial planning, but I went into investment banking for the next few years because I felt to be a great financial advisor you need to have a bit more, you need to have an edge. So I've sat on trading floors, I've looked at structured products, I've seen what can be done for institutional investors.
Yep.
And what I've done is I've come out and I spent 6 years in financial planning, really becoming an expert in how to deliver the advice and just melding the two, because for me it's about integrity. If
Great.
you are going to do the right thing for a client, you need to be able to not only say that in the first meeting and communicate that, but go away and go do it and be sure that you're doing the number one thing. So if that sums me up, that's how I would describe it.
Yeah, beautiful. Great. Phoenix Private Wealth. Phoenix, how you came up with Phoenix. I know there's a story behind it because I've had the pleasure of knowing you.
Yes.
Tell us a little bit about that.
It's a great story. I mean, if I was to tell you the first name of the company, I wouldn't even be here today. Phoenix is a story where I believe everyone has the opportunity to create their own financial freedom, but also to create a legacy with the money they earn today. And so we often are educated in the financial system. We go to university or take up a trade, and you get dragged into the pools of life. And I often find people racing through life and they don't get to enjoy it. Whereas when you sit down and you plan and you begin with the end in mind, Deepak Chopra, and you really think about things strategically, and you want to say, if I'm going to plan for my life, not only am I going to live life, but what legacy, what lasting legacy can I leave in place?
Yep, beautiful.
For me, my family, or a charity even. And you don't have to wait till then, you can do it now.
Yeah, so true. And I suppose the one thing which, and we do a number of things ourselves within the financial world. So I had the pleasure of meeting not only yourself, but a whole bunch of other financial planners and so forth. And the big thing has always been, well, what do you want to retire with? Well, that's great, but that's still 20, 30, 40 years down the track. What about now? How do we create wealth now to actually enjoy life?
Absolutely.
Rather than having to wait for 20, 30, 40, 50 years down the track?
And
So that's lovely.
The great thing is that you don't have to wait. If you plan well, you can decide this is the lifestyle that I want. And that means having the right person there, you can have the right strategies to do so.
Yep.
Probably the biggest problem you have that I saw in past life is working for those big institutions where, there's a drive, a force to be recommending products within a vertically integrated business.
Yep.
It's all product centric, whether it's property, whether it's managed funds, whether it's structured products. They're being forced to put client money into what is the big beast,
Yep.
trying to deliver shareholder value.
Certainly.
But if you have someone who's thinking strategically, saying, what is it that you want, Michael? What sort of life do you want? Do you want to be traveling? Do you want to be looking after your parents overseas or domestically? What is it that you need? And then
Yep.
we can get you that
Yeah.
over a course of
So true.
not 10 years, but 5 years maybe.
Yeah, nice. So to me, there are three categories.
Sure.
There is the advisors that are product driven.
Yes.
And that's probably not quite the right word. They're aligned to a group that are
Yes.
product driven.
Yes.
Then you've got advisors who are pretty much themselves and can just about do anything and everything according to what is tailored for the client.
Yes.
Then you've got people who do it themselves with self-managed super funds and things like that.
Okay.
You fit into the second one. tell us a little bit about how that is an advantage to be with planners who, I suppose, really aren't aligned to things? How does that actually help people in the long term?
Okay, well, just to help the listeners out there, you're absolutely right with the three categories. So you have 85% of the industry licensed to a bank or investment institution. So you have their license, and they'll be sub-licensees, authorised representatives, and so therefore they need to adhere to that bank's policies. So you've had issues with CBA in the news where their advisors are just doing the wrong thing. And a lot of it's driven from the top down in terms of culture, because the culture, not that the CEO is telling you to invest the client's money in the wrong place, but if you're driving profit and then profit is your only driving factor, that's what happens. Whereas an advisor like myself, I've gone out and got my own Australian Financial Services license. There's rules and complaints regimes, privacy regimes that you need to adhere to, like a big institution. But the difference is for me, it's about client experience. The biggest problem I had when I was working in investment banking and I wanted to find a financial advisor for myself was that every time I went to see someone, they're not looking after me, they're looking after themselves.
Yep.
And so to have an advantage, I wanted to create a situation where the client could have confidence to come to me, and I'm planning a strategy that is just for them. So when we get the strategy right, so they're paying less tax, they're building up their investments, that they don't necessarily have to stay in an asset class that's not performing because that's what they've been told to do by an investment committee that is maybe three steps down from where they're sitting, then for them it's bespoke advice.
Yep.
So that's what I do for clients. I really get to know them and I listen to them, and they become a big fish in my pond rather than a little fish in a very big pond.
Great. Yeah, and that's a great analogy, that in the end it's more tailored and it's more personal. So we've got a whole bunch of business owners who, some might have just started their businesses, some might have had businesses for a little while and are doing quite well. Why is it important for the business owners out here who are watching and listening to this to actually already be thinking about wealth creation for the future? Why is that important? And I suppose really, for someone who's got no idea where to start, what's the first thing that they actually should be thinking of?
Great idea. It's all about structure. So you need to put, before anything, you should have a business plan. But this is all great, but if a business owners are creative people, and there's nothing wrong with that, but you need a team. So having the right team, you have an accountant, have a financial advisor, have a mortgage broker, have all these people around you that can help do that sort of lifting that maybe you aren't maybe so inclined to do. And that way you can have confidence to be fearless in your own creativity. Secondly, I would say cash flow is the number one thing. Think about the business in terms of where you want it to be. So you might want to build a legacy for your children to take over at some point, or you might be thinking that this business will be something that you'll corporatize in a decade or so. So you want it to look attractive to an investor at some point in time. If you use it as a personal bank account with your cars and your credit cards, it becomes very difficult, especially when it comes to maybe succession planning, for people to really find that attractive. So think about it, be professional, and if you don't know, it's okay, but just find the right people to help you.
Yeah, brilliant. Yep, so true. So in terms of a business owner, they're doing well in their business, they're not doing anything fantastic. What's something that they could actually tweak or change or start doing that might improve their wealth over the next year, 3 years, 5 years?
Oh, Michael, I'm glad you asked that question, because superannuation is the number one thing that a business owner can do. What I often find is that business owners are so focused within their business, they see investment as something that's their business will solve all their financial needs. So when they sell it, it will be done. But remember, we're talking about having the life that you want now, not the life that you want when you're really tired at age 65. So what you get to do as a business owner is claim a tax deduction for your contributions into superannuation. If you're on the highest marginal tax rate, your business is going well, your tax rate is 49 cents in the dollar, particularly now with Medicare increasing to 2%. But now, if you put that money to superannuation, you could pay 15% tax, and over the age of 60, draw it tax-free. You have no capital gains tax on your superannuation investments. That's a difference of 30%. So when you're looking at building your wealth, don't start at the end, start today. Because over the course of a few decades, what you want is a business is left-hand income. You constantly have to be there. Unless you're so lucky to have a passive income generating business, the minute you step out of that business, it's not worth as much as it is to you. Whereas if you build up right-hand income is what I call investment income. It means that you don't have to do anything. You could be in Hawaii, you could be in the Bahamas. Whatever it is, you'll still get that income. So you want to transfer the money from your business and do it in a way that is protected from any risks that you might have. So risk is a big thing. So you'll have many types of business risk, you'll have market risk. All these things need to be considered, whether you have creditors or you have certain ventures on the side. Think about your risks and think about how you might protect them before you build up this investment portfolio. But don't start in 10 years, start today.
Yeah, great. One thing I've always remembered from over 5-6 years ago, the one thing that's the most important in investing is time. That you need time. So if you're going to start at 60, you don't have as much time as if you start at 20.
That's exactly right.
So there's a great opportunity to not put it off for another day, but instead use the time that we've got available. No matter if you're a 20-year-old entrepreneur out there starting, or whether you've had a business for 20 years, we've got time, and that's what we've got to be able to use to be able to get things done.
Yep. That saying was, it's not timing the market, it's time in the market.
Yeah.
But having said that, pardon me, having a team around you is important. We've had a soaring property market, we've had low interest rates, we've had a falling Australian dollar, we have a war in the Middle East that's about to bloom up again. This financial landscape has changed dramatically. Having professional advisors around you allows you to have someone who's focused on your wealth, to protect it, to make it change to suit that landscape. Don't wait till you come back and review your investments to realize something needs to be done. Have someone that's proactive, working for you behind the scenes to make sure that the actual changes are happening according to the landscape, so you get the best outcome. So it is time in the market and having it managed actively.
Yeah, brilliant. Okay, let's go to a completely different topic.
Sure.
I know, seeing you around the business networking world before, that you don't mind getting to a networking event, and you've been to some. So we've got some new listeners who might be completely afraid of networking out there. What's a piece of advice that you could give to those listeners in terms of what to do when you're at a networking event?
Absolutely. Some of them you've possibly taught me yourself, Michael. Always have a smile. You know, the hardest thing is to approach someone and they've got this expression on. Put on a smile and just be prepared to listen. Because you find that if you're out, sometimes you might not feel confident on what you want to say or getting it out right. Don't start with that. Go listen to what they want, ask them, and you might find they might warm to whatever you have to say pretty quickly.
Brilliant. Yep, great advice. And certainly with all of our Business Connector guests, they've shared some amazing advice that if you've just been listening to those network tips, you're probably going to become a bit of a networking professional very quickly. Thank you very much for joining us today. It's been great to be able to have Andrew along and to be able to share those insights. It's something which we haven't focused on before as business owners, that yes, we've got a business, but what are we going to do down the track? And I think it's something really important for us as business owners to be able to be thinking about it at the same time. So again, thank you for joining us on this episode of the Business Connectors. We really hope to be able to see you at an event that we have sometime in the near future. Please make sure that you find Andrew Chan, C-H-A-N, on LinkedIn and be able to connect with him, because as I said, all of our guests have great networks, they've got great values and mindsets, and they're people that are worth connecting to. So make sure that you look Andrew up. But until next time, have a great rest of the day, the rest of the week, and we look forward to seeing you on the next episode.